everyone, this is the Focus Spender, and today I'm going to be talking to you about why I switched my traditional IRA to Fidelity. But first, if you're new to my channel, I would love for you to subscribe. My channel is all about getting out of debt, staying out of debt, organizing your finances, and increasing your net worth. And if you'd like to follow me on social media, you can find me at Focus Spender on Facebook, Instagram, and Twitter, or on my website, www.focusspender.com. Now let's get started. A few weeks ago, I was listening to a podcast called How to Money, and it was their episode on investment fees and why it's killing your retirement accounts. They discussed various fees like expense ratios, loads, management fees, annual fees, and brokerage fees. So this episode really got me thinking about my own accounts and trying to get back on track to make sure that I'm doing all that I can, because I know that I have accounts out there that have some extra fees that I don't really want to be paying anymore, and so this was like that kick in the pants to get something done. If you haven't watched my video on rolling over your 403bs into a traditional IRA, I'm going to link that below. So what happened was, at the time I decided that I had all these 403bs from various jobs that I had worked at, and I wanted to make sure that my investment accounts were being managed in one central location and that I had control over what was happening. So if you're just leaving your 403bs or your old 401ks out at various jobs, you don't know the types of fees you could be paying. You don't know what's happening with your accounts. And sometimes these companies will switch from one company to another without you knowing. And sometimes they'll just kick you out of the plan altogether. So I feel like personally, if you have 401ks, 403bs just hanging out, you definitely should roll them over into a traditional IRA or a Roth IRA if you had funded them post-tax. So at the time when I did it, I opened up 3 different mutual funds within that IRA. And at the time, I felt very comfortable with the expense ratios that I was paying, because the previous traditional IRA that I had with a company that I won't mention had crazy fees. The expense ratio was like 2%. Everything that they were doing was just at the max. So I was very comfortable with the expense ratios that, these mutual funds were offering. It seemed pretty low to me at the time. But then I started using this website called Personal Capital, and I'll also leave a link to Personal Capital and the video that I did on it. I did the video last year, I think around April, I believe. And so Personal Capital, if you don't know, is a website like mint.com, in the fact that you link all of your bank accounts and you link all of your investment accounts. You can keep track of how you're spending and your investment accounts. But the good thing about Personal Capital and what makes it different from mint.com is that it's really focused on the investor. So if you're looking at your Personal Capital account, you can do a retirement fee analyzer, you can do an investment checkup. So it'll tell you whether or not your accounts are overloaded in one area or underexposed in another area. And then, like I said, with that retirement fee analyzer, it gives you a comparison chart of your investment account, so you can clearly see the fees that you're paying in different areas as compared to other accounts that you have. And so when I saw that, that's when like the light bulb clicked in my head, like, oh, I need to be doing something different, because my traditional IRA with those 3 mutual funds had the highest fees of all of my other accounts, with the exception of my 401k, which I really can't do much about because that's with my job. The expense ratios were between 0.78% and 0.91%. Again, it doesn't seem that high, but when you compare it to the other expense ratio that I am paying in my other accounts, it's much higher. Like I have accounts that are at 0.15% with Vanguard. So I thought, okay, so I know that I was paying too much and I could do better. For a while, I had planned on moving everything over to Vanguard. I even went on the website and I looked into how I would be able to roll everything over, but something just held me back. I don't know why. I just didn't do it. I just didn't do it. So when I listened to this podcast episode, everything clicked to me at that point. They started talking about Fidelity, and I'm sure you've all seen the commercials for Fidelity, but I've never paid too much attention to them. I just thought it was a regular brokerage account like everyone else. So in the episode, they were talking about how Vanguard and Fidelity are in a war to offer the lowest fees. And so Fidelity is winning that war. They're offering lower expense ratios. They're offering funds that have 0 management fees and 0 annual fees. And when I heard that, I was like, okay, now I found why I was waiting and who I need to go to. At that point, I thought I'm definitely going to open up an account with Fidelity. So that's exactly what I did. A few weeks ago, maybe like 3 weeks ago, I opened the account and then I linked my Fidelity account with E-Trade, because E-Trade is where I had my traditional IRAs. And so it linked it over. I uploaded my monthly statement because they requested it. And then they did everything else. The process was beyond simple. Like, I didn't have to call anybody. I didn't have to do anything crazy. I just linked the accounts together, said I wanted to transfer all the money, and it did. So that process took about a week and a half to be finalized. So as of last week, all of my money that was in my traditional IRA was now with Fidelity. So then today I've said, okay, now that the money's with Fidelity, I actually have to open up a Fidelity mutual fund. So what happens when you roll over the accounts, the funds that you have just move from one company to another. It's the same, nothing else changes. So now that my money is sitting in Fidelity, I had to find a Fidelity mutual fund to put my money into. And that's what I did today. I found an index fund based off of my retirement age. And it has no, management fees, no annual fees, and the expense ratio is 0.12%. So I'm about to get a huge savings there. The thing about fees when it comes to your mutual funds is that these are ongoing fees. These aren't one-time only fees. These are ongoing fees, and it really affects how much money is invested into your account. So when you think about how much money you expect to have at retirement, maybe, you retire and you have like $800,000, and that seems phenomenal. But had you not had all these fees, maybe you would have had $1 million or something even higher than that. So it's really important that you are watching out for the fees that you're paying in your funds with whatever company you have. So that's it. I just wanted to share what I was doing. I like to be transparent about my money. You guys have seen, that I'm with Vanguard, and now that I'm with Fidelity, I use Betterment, I use M1 Finance. And for me, I just want to have my money in a variety of places and just do a variety of things. And I also want to be able to do different things so I can share my experiences with you guys, so that when you're thinking about what you want to do, you are able to make an informed decision. I hope you enjoyed this video. Be sure to click like, share it with your friends, thumbs up. And if you are not investing but you really want to have more money to invest, make sure you download my guide, The 5 Payday Mistakes That Is Keeping You from Investing and Saving More. I will link that below. And that's it. Take care. Bye-bye.